What is up, everyone? Welcome back to the trading world. If you guys are new to my channel, I cover the market every single day, covering real trades you can take on NQ futures. If you guys like the type of content, definitely consider subscribing, leaving a like, following me on Twitter, and checking out my completely free Discord. The link to that is in my bio. Guys, every No News Monday this happens. Every No News Monday, and I get it, right? I agree. Like, No News Mondays, objectively, No News Mondays are going to be harder to trade. And for the most part, you should stay away unless you are really, really experienced. But I'm so sick of all this talk about how there's no opportunity, and if you do not trade, if you take a trade, you literally are gambling, because that is 100% not true, and I'm going to prove it to you in this video. No News Mondays, you guys know it's slower price action. You typically want to stay away. You don't want to, mess up. But this whole idea that there's no opportunity is ridiculous, and it just kind of makes me mad, because guys, the market is always right. If the market's consolidating on the lower time frame, that means that it's going to be moving. It's going to be manipulating and expanding on the lower time frame, and I'm going to prove it to you in this video, right? And it's so funny because I see all these people on Twitter. It's like, Jacob speculates August is got the characteristic of being the hardest trading month, and I'm like, dude, I swear every single month we make up a new reason that it's the new hardest month. Guys, lock in. The market does everything that it does very, very purposefully. Smart money controls the market. You don't think that like they just took a break for a month? No. The reason it's doing it is because it's in a specific phase, and you have to trade according to how that market condition is. There's no, like, it's just different types of trading conditions, right? So on No News Monday, lower time frame is just going to be moving sideways. Like, you're not going to get much expansion, so you could take micro scalps, and I'm going to prove it to you in this video. But anyway, guys, I just think it's so funny that, like, everyone makes excuses, and it's like, no, guys, the market does exactly what it does, very purposefully. Smart money. How do you think that they got to the point where they have enough money to control the market? They got there by having an edge, and they know what they're doing, right? So anyway, let's talk about price action today. Let's talk about what we had going on, and it's actually, we'll start out with this first thing. So this is the right out of the gate, right? Just to prove to you guys how precise these markets are, even on the lower time frame. Right at market open, right? So you can see that we have this consolidation. Right at open, we wick out this high with S&T, right? Right at market open. This is to just kind of prove my point. We wick out this high with S&T. Then what happens? So what is this? Manipulation. So we have S&T with this. So obviously, I'm not saying that we as, like, personally me, like intermediate trader, it's going to be very hard for me to catch 5-second scalps, right? But my point is, these people saying that it's not happening and just closing their ears, it's just nonsense, right? The market is doing everything it's doing very purposefully. Watch this, right? 1 minute for value gap. 1 minute for value gap. So we have S&T with this high. So what is this? Accumulation, manipulation of this high. And it does not get more precise than this, right? So accumulation, manipulation of this high. And then you can see how nice that manipulation was with this S&T. Then what do we get here? 5-second change of state. So why do I do 5-second? Because that aligns with our 1 minute PD array. So accumulation, manipulation. So if you guys don't know what I'm talking about, one of the models I trade is called flow state. Basically, you're looking for a higher time frame key level, and for in this case, this is a 1 minute fair value gap. And then on the lower time frame, we look for our line time frame change in state of delivery. I just go for the most obvious one. In this case, it's this 5-second change in state of delivery retest right here. So you can see that happens right there. So 1 minute for value gap, 5-second change in state of delivery. And watch what happens when I measure out from body to body. So once again, you can enter on the retest of the actual body because that's the order block, right? Check where we go. To the first, the second, to the third standard deviation, to the fourth. Perfectly. What is this, guys? Does this look like nonsense? Does this look like randomness? Even on a No News Monday when price action is supposed to suck, was this nonsense? Or was this perfectly planned precision and they're all lying to you, right? Ask yourself that question because it's pretty clear to me, right? Accumulation, manipulation into the 1 minute fair value gap, 5-second change state delivery. So let's go back to what Dodgy says, right? You can only like this if you didn't take a trade today because you're a trader, not a gambler. Guys, everyone has different ways they enter the market, and yes, you should be very, very precautious, especially if you're taking trades on the 1 minute, 5 minute, 15 minute, because though the market's probably not going to expand, you're probably going to get wrecked. But the lower time frame, now, see, that's where things get interesting because even when the higher time frame isn't going to expand, the lower time frame will. It's just crazy that I don't even know. I don't know how Dodgy doesn't see that, but it's very, very obvious to me. And guys, identify the conditions of the market and then execute. Don't make excuses, right? And if you say the conditions are bad, then just don't trade them, right? So look at this, right? So many traders have a red day, blah, 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 blah. Guys, if you don't want to trade this, don't trade this, right? Because what is this? Every single move higher, high resistant liquidity conditions. Every single move higher, we fail to go run liquidity. So, guys, be careful in these kinds of conditions. Let's keep going. So, anyway, I thought that was kind of cool. And then you can see here that this was market open. Market opens happens here. And what is this? Our textbook Judas swing. So a Judas swing, if you guys don't know what a Judas swing is, it is when the market opens, you will a lot of time get a fake out move in the opposite direction of the real move. And so you can see that the market opens right at 9:30. We get the fake out move. And then what happens after? We get our real move. We get our real expansion. And the cool thing is, after we sweep this low, right? We sweep this low. And then we break this high here. So what is that? Liquidity sweep, break of structure. Watch the lower time frame. You can see, so once again, I know this doesn't look like a fair value gap, but this is a fair value gap. Use these two candles as one. All of a sudden, you can see very clearly that's a fair value gap, right? That's a gap in highs and lows. So there's your first gap. Boom. Right? So we start getting displacement. Fair value gap respected. Liquidity sweep. Break of structure. So what is this, guys? This is the 2022 model. If you guys don't know what the 2022 model is, go watch that video I posted, short form video, but it's essentially going to be a sweep of some kind of lows that are off the side of the chart, right? In this case, it's right here. Then we're going to get displacement above an old high. You see that happens right here, breaking this high. And then every single gap will support price to go higher, typically, right? You see that happens here, 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 here. And when do we finally stop? When does the market finally stop respecting these gaps? When does it finally stop? Check this out, right? So once again, all these are 2022 gaps. I'm going to get rid of those because you get the point, right? Well, we respect the gap, respect the gap. When did we finally stop? Well, this is something you guys need to pay attention to every day because every single day, right as the market opens at 9:30, we're going to get this gap. This is called the regular trading hours gap. This is going to happen every single day at 9:30. And you're going to want to have this like essentially marked out on your chart right away, because the market's going to, a lot of the time, a high percent of the time, it's going to want to come back and fill this. If it's not doing that, it's probably filling a different gap. Like you can see here, like this one was a giant gap. You can see the overnight gap essentially got filled right away. So mark out you're going to basically be anticipating right at 9:30, right when that close happens, you want to pull up in the bottom right-hand corner of your screen. So I need to actually get rid of this for a second. In the bottom right-hand of the screen, you need to pull up regular trading hours right at 9:30, and then mark out this gap, this regular trading hours gap. The market's going to want to come back and fill that. And you can see, where does the market go perfectly? Where does the market go? Perfectly to the top of the regular trading hours gap, right? So once again, turn your market from electronic trading hours to regular trading hours right when the market opens. Mark the gap. The market will a lot of time want to come fill that. And if it's not filling this one, it's probably filling an old one from before. So use that for bias, guys. It's going to be really helpful. But yeah, the reason I want to talk about that today is, well, why did the market stop here? Why did our little buy model stop right here? Why didn't it keep going? Because it looks like from outside perspective, oh, we should keep going to Asia's high, blah, 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 blah. Here's why, right? The overnight gap and London's high were the exact same, right? London and the overnight gap were the exact same. This was such a strong take profit spot that, smart money is just like, yeah, let's just get out here, right? So smart money takes profit. So even though we have Asia that's a little bit higher, the market doesn't end up going there because this is just a perfect take profit spot. The end of the overnight gap and London highs overlapping perfectly. So once again, what happened here? Well, let's recap this once again. Once again, does this look like gambling to you? Does this look like randomness? Is what Dodgy's saying true? Is Dodgy making any sense right now? Is this gambling, or is it all precision all the time and it's just different conditions and not everyone can trade in the same conditions, but it's still all price action that is very, very precise? Ask yourself that, right? And understand the conditions you're in. So like, I'm not saying go into the market and try and take just any inverse value gap, because you're probably going to get wrecked, right? But what I am saying is the market is very, very precise, and you can use that to your advantage. So, okay, overnight gap here. And you can see that we do end up going and filling that perfectly, overlapped with London's highs. Once again, I'm not saying it's typically going to be best to just avoid these bad or worse price conditions in general, right? Because it's just harder. It's harder. It's like, you're putting on the extra difficulty for no reason. But my point I'm trying to make is, it's harder to trade these conditions, but it's not like you can still know what you're doing and trade them. Like, I bet you ICT he could probably trade this just fine, right? So that's just kind of the point I was trying to make. But anyway, we come fill this RTH gap, and London high gets hit perfectly. We actually do have an okay inverse value gap here, sweeping out this low within this 2022 gap. I would not take this like this because the RR is just booty cheeks, but I would definitely consider taking a Jan entry, which is an entry after a little bit of a retracement, and now all of a sudden that's like 1.8 R, depending where you put your stop loss. This could even be like 2 R. So you can see how an okay trade becomes a lot better if you change it from enter at the close to enter at a Jan entry. So that's pretty cool. Um, Note the first presented for value gap today, guys. I thought this was kind of cool. Look at this. So that was right here. This was the first presented for value gap. If you guys don't know what the first presented for value gap is, go watch a video I made on it. But essentially, there's going to be the first for value gap that forms after 9:30, and all three of the candles that make up the fair value gap have to come after 9:30. So if it was 1, 2, 3, then boom, this one's not. This one wouldn't be valid. But because this first part of the fair value gap starts at 9:30, this is valid for the first presented fair value gap. So here it is, and observe how the market backtests it. And I found this kind of cool. I actually took this trade live, except it was just on demo. But I took this live on demo. So yes, I took this real. Did I take it for real? For real? No, but I took it on demo because I wanted to try it out. First presented for value gap. You can see the market accumulates, manipulates below this low, and then what aligns with the first presented for value gap, right? This is something most people don't know, but we can align. It's a 1 minute for value gap. We can align the first presented for value gap. Typically, you're always just going to want to use the 1 minute. But you can align that with the 5 second, right? So the 5 second right here, bang. You see how precise that ends up getting hit? And what happens as well? We end up inducing these lows. Now, I had this marked out on stream. You can go watch the stream. But I actually took this right here on the retest. 5 second change state delivery, delivering from a 1 minute fair value gap. And you can see the rest is history, right? We end up drawing up to fill that RTH gap. Now, I don't think this is crazy RR. Yeah, you can see not the best RR, but second standard deviation is hit. So at least 2R. And then we hit London's highs, and then we kind of, break even out. But just want to show that out. And then after that, we end up getting stacked S&Ts, where essentially what that is when you have S&Ts on top of each other at the a higher time frame S&T and a lower time frame S&T at the same time. And if you guys don't know what S&T is, it's when correlated assets, one makes a higher high and a higher low, and the other one makes a lower high and a lower low. So we have two of them at once, right? This is going to tell you the market's about to reverse, right? Then dropping down to lower time frame. All of a sudden we get this aggressive displacement. We break this low. And what do you know, right? If you measure out this displacement from premium to discount, we end up holding this fair value gap, going down to low, and we actually hold it twice. So that's a 2022 fair value gap, kind of. It's not like the best one in the world, but And then later on, right, we end up sweeping this low. This is pretty good signature with pretty good low resistance liquidity here, low resistance highs. So all those are low resistance highs. We sweep out this low, and then we get this inversion to the upside right here. And the reason I say this is an inversion is I'm marking out these two candle bodies together as one, because that's still a gap, right? So, but using two candles as one is still a fair value gap. So when we close above, you can enter right there. And you can see this. This is a really, really nice low resistance liquidity run. These are the trades that I love to take. The issue is you have to wait till exactly, you have to wait through all this, and that's a pain, right? That can be a pain. But anyway, this ends up working out, and then we just keep going higher. So once again, these are my favorite kind of trades, when we have a whole bunch of low resistance highs all lined up at once, and then we get an inverse value gap after sweeping out a low. And we actually had S&T at the lows here with YM. S&T at the lows of YM. Okay. Then at the end of the day, we end the day with a giant higher time frame, accumulation, manipulation, distribution. And actually, I want to show you something kind of cool, right? This order block is going to be very, very sensitive. Why? Because it's the order block that comes before this massive, massive dump. This is a giant dump. Like, this is what is objectively the last up close candle before this giant dump. What is it objectively, right? It is this. It is this thing. This order block is going to be incredibly sensitive. And don't believe me? Well, you see right when I drag this over, bang. That was where we manipulate into. So accumulation, manipulation into that order block. We end up getting a change in state of delivery here. So you can maybe take this on the close. But past that, there wasn't really a clear change in state of delivery. The way I would have liked to have taken this was as a 2022 model. I don't know if I would have taken this. Obviously, I would have. It's hindsight, right? Obviously, I would have said that I would have liked to, but I still want to talk about it, right? So here's that really sensitive order block. I should have marked it out as a 15-minute order block. But you still get the point, right? We're expanding aggressively up into the order block. And then all of a sudden, bang! It's like the ground falls out, right? You can see that as like super aggressive displacement, right? We bang, pop below that low, get a aggressive candle body close below. The floor falls out. Like, this is what you want to see when you get a break of structure. So now we measure from high to low. We measure from high to low of the displacement. And equilibriums, anything in premium and equilibrium is going to be the optimal entry. And the reason we're going to take this is because of the conceptualization of this, of why. Like, why would we want to go short here, right? Because you have all of these low resistance lows here. You guys see the like how nicely these look, right? What's going to happen at these lows? People are going to get stopped out from this initial consolidation. There's so many stop losses below these lows. So, right, we push up higher, and then we start to lose momentum. Bang, the floor falls out. We get a close below. Retest of that 2022 fair value gap. Once again, the fair value gap in premium of the displacement. And then bang, all the way down. And you can see this would be like 5 or 6R. So I think that was pretty cool. And once again, you had a 15-minute order block, 1 minute change of state of delivery here. You could have taken that as well. And as well, another way you could have taken that was, there's two other ways, was we had could have taken this as a 5-minute inversion, and you'd have to treat this section of price action essentially as a void if it's not there, because of liquidity, right? This should not stop price. When we inverse this, we should go straight down to those low resistance lows. And you can see that's exactly what happens. And then the other way you could take this is on the 30-minute actually. If I can find it. Here it is. 30-minute, we get actually a really, really light bulb inversion to the downside here. If we pop above those highs, inverse to the downside. And once again, RR on the initial inversion is kind of bad. It's kind of booty cheeks, right? I would not like to take this. But if we get a retrace, okay, now I'm a little interested because now the RR is really good. And you might be wondering, well, why here? Why specifically here? Well, one, that's typically around like the amount of retracement I would take anyways. But two, this is actually a retest of that BPR of the 30-minute inversion. So you can see how precise that hits that. And you can enter at that BPR and then bang. But once again, I'm just looking for basically any kind of retrace after an inverse fair value gap. I call it the Jan entry, and then you can see we go aggressively down. And once again, obviously, you'd be scaling out through here. This is just the final TP, right? So, anyway, yeah, a lot to look at, a lot of cool stuff. And lastly, the last thing I'm going to look at is last night I tried to take a trade and I got break evened out, but I just want to talk about it. I had this framed out where we were delivering from a new day opening gap. We swept out these highs. In hindsight, this isn't the most obvious thing in the world, and we ends up being break even, right? We hit this break even spot, and then we go break even. You could have held because of conviction if you wanted to, but just kind of depends. And the reason, I guess this is on the 1 hour chart because this is a 15-minute change state delivery right here. And well, check out what happened after. We end up hitting all the TPs. And it just goes to show you that a lot of times these models will play out, and they just need to wait for the correct entry. So I should not have entered here, in my opinion. If I was to redo this, the market was not ready to go run liquidity yet, right? It was not obvious enough yet. But all of a sudden we come down, we're chopping around, and now all of a sudden we start to move higher, and we come back into the change of state delivery, inducing these highs into the new day opening gap, and all of a sudden that's a way better entry. That is entering as an inducement above the change of state delivery within this higher time frame model. Once again, 4 hour BPR. So what is this? 4 hour BPR, liquidity sweep, SMT, 15-minute change of state delivery. So that's what this is, right? That's what you're looking at. It's a 4 hour gap aligned with a 15-minute change of state delivery and a liquidity sweep. Once again, entering as an inducement of highs, just waiting for us to pop above old highs, especially because the new day opening gap was right above those highs. You can see that. Not only is that better RR, but it's also higher probability. So that's what I'm gonna leave it off as. Tweeted this today. Entering a flow state, as just an inducement of old highs, old lows, usually higher probability, and usually higher RR too. So found that was cool. Yeah, until next time, guys, let's keep getting better. I'll see you guys later. Peace out.